So much pain. Rant after rant. What's up, guys? Welcome to Money Talk. They don't want news source, they don't want information source, they don't want education source, and they don't want entertainment source for everything, anything regarding the stock market and the financial world. Alright, guys. Now, if you feel like I felt in the previous clip, alright, in the intro, well, I got some explaining for you guys to do, right? And you have no idea what's going on in the stock market. I have some explaining for you guys to do. You may be wondering, what happened to my stock that was going to 10x and now it's minus 10x, right? What happened to the BNGO stock that I held that was supposed to go to $30 at $15 and now it's at $5? What happened to Palantir when I bought it at $40 and it was supposed to go to $80 and now it's at $20? What happened to NEO when I bought it at $60 and now it's at 35? Calm down. All right, you know, just giving you guys this information, and it's just triggering some PTSD, in me, and it's pain, man. It's pain. All right, but today, what I'm going to be doing is I'm going to be explaining what happened. So without further ado, guys, let's get started. Okay, so when it comes to what happened to the stock market from end of February or mid-February to where we are today, where the when I talk about stock market, okay, when I'm talking about the stock market crash, I'm not talking about the S&P 500 or the VOO or the freaking Vanguard or whatever, right? I'm talking about the growth sector crash. And if you've been holding high P, high multiple ratio, high P ratio stocks, you know what I'm talking about, all right? If you've been checking your stocks, you know what I'm talking about. And if you haven't been checking your stocks, don't check your stocks. When it comes to the stock market and what's happening in the stock market right now in the growth sector specifically, and why we're seeing the red that we're seeing, there are multiple schools of thoughts. Some believe that it is, it's panic and it's people finding out about inflation and stuff happening, inflation going up, oh my god, which is stupid, because if you know anything about inflation, you know that the stock market benefits a lot when it comes to inflation. Okay, people get more money, so they put in more money in the stocks, and the value of stocks goes up with inflation, which is, to me, not quite a valid reason, but I understand where those people, of course, are coming from, because uncertainty causes the stock market, causes volatility, right? And being uncertain about what the inflation's data is going to be every month after month obviously causes people to be like, yo, you know what? I'm just going to sell right now and see what happens. Maybe I'll buy back in. Maybe I'll just hold on to my stocks. But another reason why we are seeing is these freaking, I want to use a worse word than that, but let's just keep it PG-13, the freaking institutions. What institutions am I talking about? No, I'm not talking about hospitals or this type of institutions. All right, I'm talking about hedge funds and banks and major corps. All right, major investment corps. Now, what these guys do is, if you guys remember, okay, so let's take a flashback. All right, let's take a flashback about on, when was it? Let's say January. All right, January, December, when the GME, AMC, Sega went down, all right? When everybody found out what a short squeeze was, even though short squeezes have been around since the stock market existed. It was like people just woke up and they were like, did you know short squeezes exist? I didn't know that. And then they just went at it, all right? So basically what happens is that, right, what they realize is that institutions are manipulating the stock market. Surprise, surprise, right? Congratulations to everyone that is a little bit late to the party and just realized that. But yes, institutions have been manipulating the stock market for way before people were born. All right, I mean, I'm talking, like, I don't know why I said people were born, because people are the institutions, but anyways, you get what I'm saying. A long time ago they've been doing this. All right, they've been manipulating the stock market. Basically, how a short squeeze works and how institutions manipulate a stock is that they shorted so much that Okay, so let's take a step back. All right, I'm just trying to explain it from top of my head about how shorts work and how short squeezes and how shorts cause the stock to go down. How stock price works in the stock market, it's simple: supply and demand. When people want to buy, or when people do buy a whole lot of a stock, the price goes up, and when people sell a lot of a stock, the price goes, and the demand goes down, the price goes down as well with the demand, right? Because nobody wants this. Who's trying to buy something nobody wants when everybody's selling it, right? When there's more sellers than buyers, the stock price goes down. Now, what if I told you you could sell a stock without ever buying a stock? You may be like, how do I do that with my house? No, you can't do that with your house, but you can do it with a stock. It's called short selling. When you short sell something, or when you short a stock, you borrow a stock and then you sell it, all right? Hoping that the stock price will go down, so then you could buy it again and give it back to the person that lent the stock to you. That's how it works, right? So you make a profit from the stock going down. That's the gap you make, right? From the time that you borrowed and sold it, and the time that you bought it back and gave it back to the person that lent the stock to you. Okay, now what does this mean? Well, if let's say I'm a hedge fund, okay, let's say I'm a hedge fund and I short, aka I sell $5 million of a stock, okay, why 50 million. Let's say I'm a freaking whale of a, you don't even need to be a whale of a hedge fund to have 50 million, but let's say you sold 50 million, you short 50 million of a stock. What does that mean? You sell 50 million worth of a stock without even owning, ever buying the stock, right? So what does that do to the stock market? And where we are today, right? Now, it's important to understand the way that hedge fund and active account managers play the market is that they play the market all the time. Okay, it's not just a buy and hold and oh my god, I hope it goes up. No. The market is their playground. All right, they got the setting. All right, they're playing in creative mode. Okay, they're playing Minecraft in creative mode right now. That's what these hedge funds do, and basically what they do is that when they see a stock going up, they buy, and make it just go way up. All right, what we were experiencing from, let's say, December to February. All right, when the stocks were just going crazy. I mean, growth stocks were going freaking 300%, 200%. Stocks people had never heard of before, and they were just like, screw it, buy. Everything's going up. It's a green market, right? And then on the other hand, so when people thought that it was going up and people were buying the stocks, the hedge funds were also like, why don't we just push this more up and buy, and we can also make profit as it goes up, okay? And they did so. That's why the prices were going crazy. And then on the other hand, when there was a little shakiness in the market regarding the inflation data and the stock market was going down a little bit, right? The stock market was going down a little bit. The freaking hedge funds are like, let's go. Let's bang. Let's hit these freaking retail investors in the head and short as much as we can. All right. Now, this has been the thing that's been happening in the stock market, like I said, since people were born. All right. Before people were born. That's what I said, I think. Right. And you know what? Yeah, I have proof. You know who actually exposed all of the hedge funds and gave them a tip? Our very own Jim Cramer. All right. Jimmy boy. This is what he had to say in 2006, talking about what hedge funds do and what his hedge fund does. So let's watch this clip. But before we get to that, guys, let's take a quick pause because I have a small favor to ask you guys, okay? And I need to have a little one-on-one chat with you guys here. Okay, so first of all, smash the like button because we're about to get in some heavy details on what is happening with the stock market, okay? Or we already did. I don't know where I'm going to insert this clip in the video, to be honest with you guys. And also, guys, another thing, every day on this channel, guys, I come up with new content regarding the stock market and the financial world, as I already said previously in the intro, okay? And my mission on YouTube is to try to put the fun in finance, okay? Because I understand that 90% of the content that there's regarding the stock market is just someone with a script behind the video, behind the camera, and they're just reading from it, and it's very robotic and it's very, very boring. And I kind of want to make the content of the subject of finance and the stock market less taboo and less boring for everyone in the world. Okay, that is my number one mission on YouTube. That's where you guys see me acting silly, doing all these funny edits and everything. You know what I mean? That's my my efforts towards making finance and stock market information something that's often viewed as very boring and very confusing and stuff like that fun for you guys, okay, and bring the entertainment and information together and deliver to my viewers. So with that being said, guys, if you guys are enjoying this video so far, and if I'm telling you guys, we're gonna get like this channel is growing so fast, and I'm so excited to come out with new content. And I drop like 2 videos a day already, right? And I cover a lot of different stocks, right? So if you subscribe and if you see me talk about a subject or stock that you don't like, don't unsubscribe. Don't be that guy, right? Come on, I have like over 1,000 subscribers. There's obviously gonna be something that you don't like, right? So just stay calm, okay? Because I promise I will come out with some content that you like. I mean, we come out with more content than freaking HBO at this point, all right? So stay tuned, smash the subscribe button. Let's get back to the video.
A lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down. But it's a fun game, and it's a lucrative game.
There's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it tougher?
Well, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So, I mean, let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning, where I would be buying the Qs and stuff. Right. This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good, because research in motion is the key today. So you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. What I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today, and if you're not doing it, maybe you shouldn't be in the game.
Okay.
All right, so now that we've heard the rat weasel Jim Cramer expose himself, right, in 2006, I mean, listen, guys, I'm not a Jim Cramer hater. I actually love watching NBC or whatever freaking channel he's on, right? I enjoy hearing him talk about certain stuff, especially when he's talking good about stocks I own, right? I like that about him, right? But I mean, he's not the only, it's not like he's the only one to blame, right? I mean, he is kind of giving advice to other hedge funders, but you know what? They've been doing this way before freaking the internet was even in existence, all right? And the SEC is a freaking joke. They do nothing. They're just, they sit back and, I mean, it upsets me to even think about it. All right, so let's just talk about what you should be doing now. Now, like I said before, right, what hedge funds do is that they either push a stock way up or they push a stock way down. But what this creates is a rubber band effect, like this. So you got this rubber band, right? It goes way up and then it goes way down, right? This is my mask, guys. You know, here in Ontario, we're still we still barely have vaccines. All right, so we're in lockdown still, unlike as if it's last year. It's like, open it up, bro. Open it up, right? So, anyways, like I was giving you guys this example, it goes way up. The stock market goes way up, and then right back down. All right, right back down, and then it goes way down. It goes way down, and then it goes way up. All right, this rubber band isn't really doing it. Let's do it this way. All right, it's not really doing it, but you guys get what I'm saying. So they push it way up, and then when it goes way up, they push it way down. More down than it should be, and more up than it should be. Right now, I think we're very, very close to the way more down than it should be. All right, I mean, when you look at the stock market, when you look at the high growth interest stocks, you're like, Jesus Christ, what is happening? Now, why high growth stocks, right? Why do they pick the BNGOs and the Palantirs and the NEOs and stocks like that? Why aren't they targeting Walmart? Why aren't they targeting freaking Macy's or, I don't know, Bank of America or something like that? Well, not Bank of America, because the SEC would rape them for that one, right? But why aren't they doing such things, right? Why are they going after such high growth stock, high PE? Well, because these are all speculative stocks, because people like to think that BNGO is going to get to $50, but are the numbers there? No. People like to think that NEO is worth $100 trillion, but are the numbers there? Not right now. Do I think they will be there? Yes, I do, right? So I think that this right now is a great buying opportunity. Now, how should you be buying these stocks? Should you just go in and put $1,000 down and be like, I want in right now? No. You should not be doing that. What you should be doing is what's called a dollar average costing, right? Which is basically you buy. I'm sorry. If you've been watching this channel for a long time, you're probably sick of hearing me talking about dollar average costing, and you're like, dude, shut up. But I'm gonna just say it one more time. Basically, how dollar average costing works is that instead of spending all the amount that you want to buy a stock for, you spread it out. So let's say I have $500 worth of cash, right? I have $500 cash that I want to buy NEO. Instead of spending $500, instead of buying NEO on Monday with my $500, what I do is that I spread the $500. I buy $100 on Monday, $100 Tuesday, $100 on Wednesday, $100 Thursday, and $100 on Friday, making my $500 spread so I get the average cost in that week. Now, it doesn't have to be Monday, Tuesday, Wednesday, Thursday. It could be every Monday. It could be every Tuesday. It could be every other day. It could be whatever you want it to be, right? As long as you're averaging instead of going in at one price. For example, and this saves you a lot of, this kind of lowers your risk in a way, especially in a market as volatile as we're seeing today. I mean, it seems like I'm just betting on the green day, on the next huge green day as we had last week, right? I mean, you see the stocks go down 30%, 40%, 50%, and then one day we get that 10% green that's everyone looking forward to, and when we get that 10% green, people are like, screw it, man, I know where this is headed. It's just going to be another red day after this, so I might as well just lock in my profits, take my profits, and go home, right? So my advice for you guys is, first of all, don't sell. Do not sell. The worst thing you guys could do is sell and try to buy it cheaper, right? Because as always, my favorite quote of all time is, bears make money, bulls make money, pigs, they get slaughtered, all right? Don't be a freaking pig, all right? If you're seeing red on your account right now and it's a stock that you believe in, has a great future, for example, NEO, right? I mean, NEO, the average analyst has a price target for NEO at $60, and they believe that the stock should be worth $60. And the analysts hate NEO because they hate Chinese stocks, which I guess I understand where they're coming from, right? It's like, it could go away anytime, right? I mean, Jesus Christ, they almost did. And then you got, what was I saying? Yeah, so you got NEO, where they think it should be worth $60, and they hate NEO, right? They hate NEO because A, it's Chinese stock, B, it's high multiple, C, it's EV, all right? And analysts hate EV, okay? And they think it should be worth $60, and right now NEO's at like the $35 range. So, that's what I'm saying. So don't sell, okay? Don't sell. That is my number one advice to you. Do not sell. Do not sell. The market is a cycle. The market goes in cycles. It goes way down, it goes way up, it goes way down, it goes way up. And right now we are on the way down sector level of things, okay? Now, when will it go back up? Will it be next week? Will it be next month? Will it be tomorrow? I don't know. But will it? Yes, it will. And I promise you. Now, will all the stocks recover? That's a good question. I think right now you need to allocate your money and your capital properly, right? Because you want to kind of move away from the meme stocks, right? And all the Wall Street Reddit stocks like Sense and all the promised short squeezes and etc. You know, like Sense, like Zomedica. I mean, Zomedica is a good company, and I did lose a lot of money, so I hate them. But yeah, I mean, I didn't lose yet. It's not in paper yet, but I'm very red as of now. Okay, so and those stocks, you gotta kind of move away from those stocks and move towards stocks that are going to recover sooner. For example, the Neos, the Palantirs, and companies that actually do have an earning already, right? They already have numbers on their balance sheets, and the company's already kind of set out, and you know you can kind of see where you can expect more catalysts upcoming, right? And you have numbers to compare their previous year to their current year. With that being said, guys, let me know down below. Let me know down below what you guys think. And as always, you know, I bring the energy on this channel, right? I'm hype as hell, right? So let's go, guys. Smash the like button, subscribe. Let me know what you guys think. Am I crazy or am I right about these stupid... I mean, how could I be crazy? You guys saw what freaking Kramer just said, right? Like, he exposed himself, basically. With that being said, guys, thank you for watching. Money Talk out. Subscribe.